Yo, what's going on, everyone? I hope you're all well. Hope you all had a good weekend and a good, successful Monday and Tuesday trading days. In today's video, I'm going to be talking to you about supply and demand and how you can implement them on your charts and use them on a day-to-day basis and benefit from it, right? So, supply and demand. What are supply and demand? Supply and demand is basically very similar to support and resistance. However, support and resistance are usually aligned, one set price. That price comes to and either rejects, reverse, or breaks through from. However, supply and demands are area where it's a range of it's an area. It's not a set price. It's within this area. It's a supply area and a demand area. Now, supply is always on top. Supply is always on top, and demand is always on top on the bottom. Demand, right? So always bear that in mind. Supply is basically resistance. Demand is basically support. Now, how do we identify? My bad. Supply. There we go. So how do we identify supply and demand? Well, usually you see a major move within the market. Let's take this for example, right? You can see here that this is a demand area, and the reason for that is when price came down here, it flew, right? That's a demand. There's a lots of demand for this price, which means this is an area of interest, right? We highlight it with a triangle, and then we just take it to the future, right? And usually what tends to happen is when you draw these supply and demand on your charts, you just wait for the market to come back to that area, touch it, collect more orders, and you know that this is a demand area because from the past, price was here, and as soon as it came down here, it flew up, right? Price flew up, consolidated, whatever did this thing, and then it came back to that demand area. It tapped us into it, and the market rejected and flew from there and continued on its way. So basically, this is a demand area, and let's say the market is right here, right? Let's say that's where the market is at, and now we're watching the market. Now we just let the market come back to this area, right? We let it come back to this area, and then we just see what happens, right? We be patient and let the market come to the area. Boom. Taps us into it. Now what you could do here is go down to smaller time frame, right? And look for bullish engulfing signals to say that, hey, the market has now is basically finished from this demand area and ready to reverse, right? So now let's see what happens here. Comes back into our demand area. Now we just watch it manually, and then we see these major momentum candles. And that's when we take our long position. We're with our stops just below, right? You can either put it just below the demand area or just below these lows, right? And let's say for this video's sake, we are targeting 1, 2, 3, right? Put it there, just for the sake of the video. Now, we're now in the trade, and we just see what the market does. We're in a little bit of drawdown, but we never get stopped out. Why? Because we have our stop loss just below the lows, right? And we know that this is a demand area. So we know that, hey, there's gonna be lots of buyers here based on what happened in the past. Now, of course, nothing is guaranteed, but you have to watch it and see that, okay, this is an area that I have to keep in mind, and it's a demand area, and you just be patient and look for confirmation that the market is now gonna trend to the upside, and then the market taps into our demand area, and then the market goes on its way, smashes our take profits. This simple, right? This simple. This was a beautiful 1, 2, 3. See, came back again into the demand area. We could have entered right there again, right, with our stops just below, and you could have targeted the next high. And look at that, we have a 1 to 4 almost. You see how you can use supply and demand to your advantage, and then obviously benefit from this. Now I'm going to give you another example on a sell on a supply area. Let's just delete all of this. Let me just remove drawings and get rid of this. Go back to our chart. Now what do we have here? Let's see. Let me find a sell example for you guys. Right here, right here. Why should we go back? Right here. Now, let's say we are right here, right? Let's say we're right here. We have a double bottom, right? Market drops heavy. What do we do now? We take our triangle and then we highlight this area, and we know that, hey, this area is a supply. Remember, supply is always on top. Supply is always on top, demand is always on the bottom. So we have supply here, right? Based on this major sell-off. Now we highlight this area and we wait for the market to come back up, tap into this area and sell it for the market to continue its trend. We wait, we're patient, and then boom. Look what happened. Literally, let me just right there. Actually, I'm gonna give it right there. Now, boom. We go down to smaller time frame, like the 15, and we can see that the market has left a doji, a reversal pattern. This 3 candlestick pattern indicates a reversal, one bullish, a doji, or maybe some people call it an inverted hammer, but at the end of the day, it's a sell signal followed by a bearish and another bearish. So what we do here is we take our short position, we enter the market. So that was we enter the market again, stops just above the highs, and let's target our next lows, right? First take profit here, and you can even second take profit right here. Now let's see how this trade would have played out if we entered. Almost no drawdown and straight to our take profit. I hope you guys benefited from this video and learned something new. If you have any questions, please do let me know. This is supply and demand and how you draw them on your chart and what to look for. And yeah, guys, hope you guys enjoyed and found value. If you did, please show some love, and we'll see you guys next time. Peace.